Good morning, everyone, and welcome to Thursday morning. It's Stephen Whiteside here from the uptrend.com. Well, today's an interesting day. U.S. stock markets are going to be closed for the day in honor of the passing of President Jimmy Carter. At the same time, the bond market, the currency market, and the futures markets are trading. We do have gold and crude oil currently up in the pre market. That could help the Canadian market. At the same time, we've got U.S. stock index futures pointing lower. And so, of course, stocks aren't going to open at 9:30 and start trading, but the futures traders are hedging themselves right now. Last time I checked, the iShares or the futures for the TSX 60 were unchanged. And with gold and crude oil trading higher, that could change throughout the morning. Now, we don't have any major economic numbers coming out this morning, so it should be a fairly quiet day for the Canadian market. Now, probably the biggest story in the markets right now is the big sell-off in the bond market. Here's a chart of the 30-year bond, and you can see that we made a new low yesterday. And of course, if bond prices are falling, the yields that you get from those bonds are continuing to move higher. And so we made a new high for the yield on the 30-year bond on Wednesday. If you look at when the trend changed, which was right here back in early December, that's when the Russell 2000 started to fall apart. And of course, stocks in the Russell 2000 don't have their own cash for the most part. They're borrowing money to exist. Most of them don't actually make any profits. And so this is what is happening to the majority of the U.S. stock market at this time. Now, I watch the VIX very closely, or the fear index, and it's been elevated since the middle of December. And if we go back to times when, you can see that in October we had a little elevation there and a little elevation in late October. But look at how, how small the bars are compared to how wide the bars have been for the last month. And so here we are, we're still very elevated and we're still on a sell signal. So what we're looking at right now is a market that is very stressed. If we're coming into today's action, if the U.S. markets were open, we'd be looking for a close above 1859 to give us a new buy signal. A buy signal in the VIX usually equates to lower stock prices, as options traders are getting ahead of a falling market. They're buying options to hedge their positions, and they're willing to pay more for that hedge if the market is going to fall. Now, I follow the VIX very closely, as I mentioned, and HUV traded on Toronto is the way I would play it. And coming into Thursday, looking for a close above $8.38. Not sure we're going to get a lot of movement in the VIX on Thursday as it's traded in Toronto. Now, moving on to the major index ETFs, and we'll start off looking at the U.S. market. There's the Dow, still on a sell signal. It's been on a sell signal since early December. Then looking at the SPY for the S&P 500, we're still on a sell signal here. If we take away the big cap tech stocks and give all the stocks in the S&P 500 equal weighting, you can see the equal weighted ETF is much lower than the SPY. And we're trying to hold $174 here. And if we follow $174 back, that takes us back into the middle of September. And so that's how far we have fallen since making an all-time high back in November. Then looking at the NASDAQ 100, we did generate a buy signal on Monday, and that fell apart on Tuesday. So we're coming in to Thursday on a short-term sell signal for the NASDAQ 100. Now, moving on to the Canadian market, got a pop the other day, and we're still on a buy signal here for the Vanguard Canada ETF. That would change on Thursday if we close below $50.76. We've traded down to the lower channel line for the past couple of days. Now, the iShares for the TSX 60 are holding up a little better. Had an inside day on Wednesday, a day of indecision, of course, a pause day. And on Thursday, we're looking for a close below $37.54. Now, if we take a closer look at the iShares for the TSX 60, our next level of resistance is at $38.28. And if we can take that out, then look up, and our next target is $39.06, which is a number that we talked about a lot last year. It was not only a daily, but a weekly target. We'll take a look at that in a second. But there's the all-time high, which was at the top of our projected trading range on the daily charts We have higher numbers when we look at the weekly or monthly charts. Now, if we come down to the low that we hit in December, down at 36.72, if that breaks, you can see the next two targets to the downside. For that to break, we would have to take out the 100-day moving average, which acted as support in December. And if that breaks, of course, we could look down to the 200-day moving average as the next logical target. Now, if you look at the weekly chart, you can see 39.06 is our next target, followed that by 40.63. That would be the next target to the upside on the weekly charts if we were able to take out 39.06. Now, if we look at the monthly chart, 40.63 is our next target. Of course, we'd have to take out the daily target and the weekly target to get to a monthly target. And then, of course, if we take out 40.63, then 43.75 would be our next targets. So those are our targets to the upside for the year of 2025, if we can take out 39.06. Of course, if we can't take out 39.06, then look two lines down, and that takes us down to 31.25. That would be our target to the downside for 2025 if the market wants to start to break down. Now, the makeup of the Canadian stock market is very different than the US market. And when we look at the list of the most actively traded stocks in the US, it's mostly big cap tech stocks. Whereas in Canada, a lot of the most active list is filled up with financial institutions. So a much different makeup for the two different markets. And it is the financial sector that's been holding the Canadian market up. Now, right now, on a short-term basis, the financial sector is currently on a sell signal. It's been treading water for the last week or so. And the biggest component in that sector, of course, is the Royal Bank. And the Royal Bank came back yesterday and ended the day on a short-term buy signal. The TD Bank, which has been on a buy signal for the last couple of weeks, of course, is the dog of the Canadian financial sector over the past 6 months or so. And here we are trying to fill an open gap. If we look at our price target chart, our next price target is 79.69, and you can see that that acted as resistance back in November into early December. And so we're expecting that resistance to hold once again. Right now, we're also trying to fill an open gap, and you can see that we had a reversal yesterday. We're trying to get to 78.82 to fill that gap. Yesterday, we've got as high as 78.75, so 7 cents away. But then you can see the market started to sell off. So there are some orders in there just at the top of the open gap. There's some sell orders in at this moment, which is holding the TD Bank down right now. That could certainly change on Thursday. Brookfield is the next biggest player in the financial sector. It is still on a buy signal here. And then the stock people like to trade the most in this sector is Manulife, and it is currently on a daily sell signal. That would change on Thursday with a close above $44.37. Moving from financials to the energy sector has been on a buy signal for the last week or so. And looking at the iShares for the energy sector, we've been talking about our next target was 17.97. So we've hit that for the past 2 days. Our next target to the upside is 18.36. The way I like to play this sector is with the Beta Pro leveraged ETFs. And here we are at 29.69. And so you've had a chance to lock in some profits there. With the remainder of your position, you probably want to sell half of that at 31.25. Is that a realistic target? Well, we were up there back in November, so it's certainly a doable target if the market wants to keep moving higher from here. Now, the biggest player in the Canadian energy sector is Canadian Natural Resources, followed by Suncor, followed by Imperial Oil, and then Cenovus. The stock people seem to like to trade the most is Baytech, and Baytech hit 391 the other day, so congratulations, you got to lock in some profits. Our next target to the upside is 430. Is that realistic? Yes, it is. We were up there back in November. Then looking at Infotech, and of course, this is where Shopify hangs out. Shopify generated a buy signal on Monday and then rolled over on Tuesday and was up yesterday, but is still on a sell signal right now. There is Constellation Software making a new low on Wednesday, but recovering nicely going into the close. Still closing below the lower channel line, so not expecting a buy signal on Thursday. There's CGI on a sell signal. At the same time, we've got Celestica making a new high on Wednesday and BlackBerry, which made a new high on Tuesday and closed basically unchanged on Wednesday. Then looking at the telecom sector, and this has been the dog of the Canadian market for quite a while now. It is currently on a short-term buy signal, but look at the weekly flypaper channel for this particular sector, and you can see that in early 2023 we started to break down, and now the flypaper channel is acting as resistance. So yeah, there could be a trade here, but it's going to be limited by the flypaper channel and the previous lows. So just be aware of that. There are opportunities here. These stocks have been very, very, very sold off over the past year. There's BCE currently on a short-term buy signal. There's TELUS. TELUS is now has a bigger market cap than Rogers. Rogers still on a sell signal here. That would change on Thursday with a close above $44.78. Let's finish off this morning's presentation with just 2 points, and I'll go back to the telecom sector. The telecom sector is a series of lower highs and lower lows, and even if we get a buy signal for Rogers joining the buy signal for TELUS and Bell, that doesn't change anything. That doesn't change the long-term pattern. The first thing we're going to need to see is if we take out the December high. If we can do that, then we're putting in a higher high, and then we would want to see a higher low. That would be the first sign that something new is happening. But otherwise, it has been a series of lower lows and lower highs, and recently we put in another lower low. So don't expect the pattern to unwind anytime soon. We could certainly have a nice run up to the $49 level at some point, and that would take us back up to what was support in November and December. And that could certainly be a nice trade, but certainly does not break the pattern. To unwind this pattern of lower highs and lower lows, it'll probably take several months, and it's probably not going to start on Thursday. Now, in this presentation, we've been mostly looking at daily right-side charts, and these charts are designed for swing traders. And I figure if you're here on a Thursday morning in the pre-market, you're probably a swing trader. And of course, a swing trade usually lasts about 2 weeks or a moon cycle, and that's what we're focused on in this presentation. Now, if you're a longer term investor and you're watching the charts on a daily basis, you could use our midterm charts. And those are designed for position traders or position investors. If you're a longer term investor, this presentation could be confusing for you because we could be bearish on a short-term basis using our daily charts, whereas the weekly or the monthly charts are still on a buy signal. And so that can get confusing because the daily cycles can go up and down and still not affect a weekly cycle. So just be aware of that. If you just want to check your portfolios on the weekend, you can use the weekly charts. And if you want to just check your portfolio at the end of the month, you could use the monthly charts. You don't necessarily have to look or follow the daily right side charts. But again, if you're here on a Thursday morning, that's probably what you're most interested in. Okay, folks, that is all for this morning's presentation. Expecting a fairly quiet day today with U.S. stock markets closed. Of course, the bonds and the currency markets and the electronic trading in the futures contracts will still go on today, but it should be a fairly quiet day. You have a great day. Next time you'll hear my voice is on Friday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.